Hey guys, how's it going?
Hey Scott, Steve, what's
No,
happening over there in California land?
not much. Trying to stay awake in this sleepy, stale market.
You got that right. And, as fate would have it, today is April 15th, otherwise known as Tax Day. So we'll be glad to see this one in the books. Hope everybody's got their taxes filed. And if you haven't, I hope you don't owe too much money. All right. Well, today is April 15th, and it's also time for another office hour. So before we get rolling here, just a quick blurb to make the lawyers rest a little bit easier. Just want to make everybody aware that's in attendance, whether it's this webinar or any of the other 8 webinars that we host throughout the week, that all the information that we share with you guys and girls is for educational purposes only. If you do need investment advice, what to buy, what to sell, when to do it, all that good stuff, please seek out a registered investment advisor or another licensed individual like a Series 7 stockbroker that can legally help you out with that type of advice. Alrighty, and uh, attendance is pretty decent. Probably not quite as big as we've seen as of late. Maybe that's because everybody's doing their taxes today. In any case, for the regulars, bear with us here for a moment. I'd like to tell all the new people about the community that we've built and fostered around the TI Pro product. It all kind of starts off with Barry's trading room. By the way, the trading room's had an overhaul here lately. Got a bigger, better software in there, more conducive for that type of environment, and working on the single sign-in, which I think we had a few snafus with it today, but getting the kinks ironed out. So the bottom line is Barry runs the trading room. And 400, 500, 600 people in there every day. If you've shopped around the web for similar trading rooms, you know that they all come with a pretty hefty price tag, which is a really nice thing about ours is that there is no cost. It's part of the TI community. So great place to learn if you're new, great place for advanced traders as well. A lot of good people in there sharing their plays, along with Barry showcasing the way that he uses trade ideas and showing you his trades as well. So if you have not been taking advantage of that resource, by all means, get in there and do it. Today is Monday. You get myself and Steve Gomez. Steve's going to take the steering wheel on Tuesdays for the trade of the week. Andy Lindloff's going to ride shotgun with him. Then we get Wednesday. We get Hump Day coming around, and we change it up a little bit and bring in the CEO and founder, Dan Merkin, along with our Chief Technical Officer, Brad Williams. Always fun and entertaining. Great place to see maybe new technology that's coming down the pipeline and just a bit of a different take on things. Thursdays is when we're going to round out the 5 p.m. Eastern webinars with Andy's Trading Studio. Always a great place to get some new alerts. And, I'm going to ride shotgun with him as usual. Fridays come around and we change it up significantly. We allocate 3 hours starting at 11 a.m. Eastern Time, going until 2 p.m. Eastern Time. So Friday support session quickly becoming ever so popular, and for good reason, because you got myself, Steve, Andy, and Sean in there all attacking your question at the same time. So it's really anything trade ideas related, whether it's fabrication of strategies or brokerage plus Holly type questions. All right. In addition to those webinars, we've got the TI University Monday through Thursday. These all start at 12 p.m. Eastern on the button. Beginner 101 on Mondays, Tuesday 201s, Thursday 301, Wednesday 301s, and Thursday 401s. I actually teach the 401 course. We do recommend that you take these in order because you'll need what you learn in 101 for 201 and so forth and so on. So all in all, 9 webinars a week coming at you. So be sure and sign up for every one that you can attend. Whether you're beginner or advanced, there's something there for everyone. And as always, the AI, the first AI module came online in January of 2016, and you can see what's happened to our subscriber growth since that point in time. And we also have 3 AIs these days, not just one. We've got Holly Neo, we've got Holly 2.0, and the original Holly Grail, or what we sometimes call Holly 1.0. And we've got a new one in the hopper. It's in the testing phases right now. So in the near future, we may just see a 4th AI module make the scene here. But Users are responding. User base keeps growing. What will it look like at the end of 2019? Well, you just have to use your imagination a little bit. So good things happening, people responding well. All right, here we are to today's agenda. So Steve, if you're ready to take a look at the squiggly lines that we call charts for
Sure.
the major tracking ETFs, I'll kick it on over to you.
Sure, you go. All right, so I was in kind of a creative mood over here while you were talking.
I see.
That's my volatile skier guy when we lost the market to the downside, and there's my steady rock climber guy. You see that?
Oh, I thought that was Atlas or something holding up the market.
Yeah, it's the steady rock climber. So that's kind of the story. Say goodbye to them. So, zoom way back, and this is that shower that the market that we always talked about. It was more than a shower; it was a watershed moment, and so that kind of comes into perspective when we zoom back into what we're talking about here. Come a long way, but that was a really nice watershed moment. Again, we spent a day and a half in bear market territory, and then the rock climber just kept moving higher and higher. And along the way, we never really got any deep pullbacks. We just got a lot of little bird baths or monkey baths. But the story, oops, there we go. The full-on story has been really the lack of volume again. The last week, you can see this line under that line has been the average volume, not even gotten to the average point. I forgot how far back that goes. But a lot of gaps, a lot of dojis. Today, hardly a gap at all. But again, kind of a lackluster, stale market action. The bigger picture here is, in my contention, we are going to run back in here and test all-time highs that were achieved back in the late summer. Now, how are we going to get there? Are we going to just do the same thing, gap and doji on anemic, stale volume? Or are we going to give ourselves maybe some sort of a little bit of a bath? It wouldn't be out of the realm of possibility to fill this gap back here, which would still keep us in the trend of higher highs and higher lows along the way. That's what I'd like to see as a bull, but we very well just could slowly creep up here. And then the real interesting point happens is what happens to price action when, because I'll use the word when, I really feel we're close enough in the neighborhood. It's going to happen. It's just a matter of how. But when we get there, what's going to happen? Are the sellers going to jump in? Are the remaining bears and shorts going to capitulate? Are buy stops, the fear of missing out, the FOMO people, are they going to finally throw their hands up and try and get long? I don't know, but this is where the next point of interest is going to become in the S&Ps. But getting there has been a slow, stale, low slog of movement. Very minor intraday ranges. Pretty much whatever happens in the morning probably needs to be reversed in the afternoon. The last 2 days, we've had nice buying of the intraday type dips. So moving forward to maybe the next interesting chart. Let's see here. We go back to the leadership of technology. Let's take a look at the NASDAQ by way of the Qs. I'll go back in here and draw its respective all-time high, and that's how close we are to that. Zooming in, same type of action, low volume under the average volume, gaps and dojis, gaps and dojis. Bit more sideways action here in the Qs. I mean, pullbacks are desired, but sideways actions can work too. It's possible the Qs could sit here and go sideways for a couple more days, and then that moving average could force the issue, and there we go. We could be testing that recent all-time high in NASDAQ Qs before we know it. And then again, there's also that gap down here. If we do have some sort of a volatile pullback on any type of crazy news, you never know. It could come at any moment. The Dow doesn't look that bad at all. It's been above its 200-day for a while. Really nice looking a little cup and handle here, a little double cup and handle. Very, very constructive in the Dow, your father's Oldsmobile, so to speak, the older, smaller industrial. And then, of course, we look at the respective highs. Again, same theory applies. We're close enough in the neighborhood. We're going to test that. I just don't know how. But this action here has been a little bit more constructive. It's not been, lurching higher on the gaps and dojis. Interesting. And then lastly was the one bringing up the rear, which we laughed about last week. The wounded animal kind of get across and join the rest of the herd. It's been getting stuck here. The IWM, the Russell 2000, the small caps, been getting stuck at the riverbank. It can't seem to get across the river. And so eventually, will it do so? Well, the last couple of days, it's been able to actually post a close 1, 2, 3, 4 days in the last couple. That's constructive. It very well could bounce off today's low and keep an eye out for a push in the IWM. If this thing grabs the baton and grabs the bit and takes off, the rest of the herd could really look forward as well. But a bit more to go here with the Russell 2000 IWM's respective all-time high. As you can see, a lot more to go there. So again, if the IWM does kick into gear, keep an eye on the NASDAQ. But again, great case to be made for how overbought and overextended these things are. It'd be nice to have some sort of a pullback to grab a battering ram and get a couple fresh meals and let the troops have some energy to push through. And that's where we are. I mean, bottom line, I think we're going to test these levels. I just don't know how or when. We're going to take the mountain road or the direct toll road. That's it, Jimmy. That's really all I see.
Yeah, good stuff. Yeah, I agree. It's just a matter of when, not necessarily if.
The proxy of Apple doesn't look bad here as well, kind of riding that moving average. I know you took the screen from me.
Sorry.
No, that's cool.
Real quick.
No, that's cool. Yeah, Jamie's going to pull up Apple real quick. It's been hanging in there. If Apple decides to have a big day, of course, the NASDAQ and the rest of the market could as well. But sometimes that's a fifth proxy, a fifth ETF to look at, so to speak.
Yep, good old FANG, where they go one, they go all typically. No pun intended. Okay, ladies and gents. Thank you for that market recap, Steve. As he was indicating, look how paltry the volume levels were here on the major tracking ETFs. SPY coming in about 25% less than normal as far as relative volume goes. And very interesting today as far as the gap goes. Probably the smallest gap I can remember in quite a long time. Gap on the SPY was only a mere 11 cents, which, all we have to do is kind of squish our 15-minute up to see what the gaps have been in the past. Some bigger than others, but definitely this one was the smallest one. So right off the bat this morning, pre-market seeing that gap up level, I was like, well, I don't know how the day's going to unfold here, but I like the fact that we're only gapping up a small amount. Everyone's heard us talk about how the AI has more difficulty finding traction in the big gap days. A little bit different of a story today because we did have the small gap, and then we had a good period of after the 15-minute first opening 15-minute bar there, 1, 2, 3, 4. For the next hour, we cycled down to the bottom that was put in. So not only does the gap make the AI, the statistical model, meet a little bit more resistance, but it makes it more difficult for a lot of trading setups that we typically look for. So right off the bat this morning, when I saw the very small gap, and then in the first 15 minutes, which keep in mind these are 15-minute candles, I got my CC readings, and I'm like thinking to myself, well, today should be a pretty accurate read. And we didn't have the biggest downside bias, but 54%, nothing to sneeze at there. Typically, I like to see, the higher numbers here, but with a relatively small, almost non-existent gap on the SPY of 11 cents, and this thing worked like a charm today. So what do we have in the first 15 minutes? And let me just recap what this window is looking at here. My compare count window is looking at the larger cap stocks, meaning the market cap has to be 4 billion minimum. And then we just tack on whether they're hitting highs or lows with a little accelerated 1-minute volume. And so looking at this metric after the first 15 minutes, a lot of times can give us a little edge as to market direction. Now, for the past couple of weeks, it's been pretty accurate to the upside. Today, it pretty much hit it on the head to the downside. As we can see here, we get the readings at the end of this candle here, and then boom, boom, boom. Just playing the SPY or the overall market, or whether that kind of set us up to go, you know what, I'm predominantly going to focus on the shorts for now. Now, let's talk about Holly for a second here before we get into her very small universe of risk on and risk off spread today. What was Holly trying to do? for that first hour in the market. Well, you can see here, doesn't take a genius to figure out that with the exception of Holly 2.0, which is the only one that finished positive today in risk off mode, Neo and 1.0 were kind of swimming upstream, going against the down market. And, not a big surprise because the statistical model, when we look at the overall action of the market, yeah, it's going to be looking for more long things because that's what's out there most of the time. But when you fold in the low volume and the down move, Holly and all three modules didn't have that great of a day today, trying to go long into the face of this. And then after the bottom was put in, we just didn't see a whole lot of trades come out after that level. So in any case, even with Holly posting some losses in 1.0 and Neo, a little bit here in 2.0, there are still some interesting risk on, risk off spreads here today. So let's take a look at some of that stuff. Of course, when I say a little bit, I mean a little bit. Hey, let's just take a look at Myrna first. Okay, mRNA. What we're seeing here is a classic example of Holly calling out one of her audibles in the form of reduced risk. And just to recap here, why does Holly close a trade out? Well, the three standard reasons: stop loss or profit target or timed hold. And then the two audibles that she can call are reduce risk and profit save. Obviously, we're not seeing a lot of profit saves on here. One that probably shouldn't even be on there because it was a loser. But looking at the Myrna trade, here's the long signal from Holly. What do we have shortly after that signal? Well, here's the infamous sideways action when she's, a lot of the times we get this sideways action, that's when we're going to see her pull the plug and reduce risk or profit save because the trade's not heading in the direction that it was intended. So we get that today. The shaded area corresponding, she gets tired and pulls the plug right here, only to see it continue to sideways dance, only to move higher in the last hour of the day. So the bottom line is this: when we see these types of sideways plays and Holly getting out early, matter of fact, it's something that I go and look for after Holly started the session. Anytime she gets out of something on a reduced risk or a profit save, I'm immediately pulling it up if I'm there and seeing if it's exhibiting a pattern such as this, because we've seen this so many times in the past. Sideways action, consolidation, only to go head higher or lower depending on if it's a short towards the end of the day. But the bottom line is this: we see Holly getting out for her 7-cent loser, probably somewhere just below the entry line here, bottom half of that green candle, closes it out for a 7-cent loser. Now, clearly, at that point in time, we can see what's going on here. We can see never really came down here and acted like it was going to peck us out with the stop loss. So, it didn't take didn't have to stretch the imagination too far to go, you know what, I'm just going to stay in it. It's hugging the entry line, so a break-even stop wouldn't have got the job done. You could have stuck with your initial stop loss, or you could have used the bottoms of these candles right here if you wanted to tighten it up a little bit. That would have kept you in as well. But whether you got out of half with Holly or just kept the whole lot, this one would have panned out well for risk on. So what do we have here? 51 cents here between -7 and 44. So never going to use the term easy, but this one was one that you could have plucked some of that spread just by being a little bit patient and recognizing the pattern that's going on here. And as you can see here, no other risk on to be had from good old Neo. Not really even any to be had from 2.0. What do we got here? A penny? Not even really worth looking at. That was on a short sale. She pretty much got all of that one. But a couple to take a peek at here. Well, let's save the best for last. And it's kind of a thin and not a lot going out there when a $2 stock is returning the best yield today of 5.55% heading into the close. But let's look at FIX first. Kind of a mirror image of what we just looked at. Holly makes the entry up here. And why did she close it out? Once again, on the reduced risk functionality, because we get the sideways action. Stock's not heading up, so she pulls the plug early, and pretty much the same song and dance as we saw on the Myrna. We got a consolidation going on here. So I always like these because here's where Holly enters the trade. She gets out right here. All we really have to do is mark this high in case we want to bolster the position as this little break right here is occurring. Once again, if we decide to stay in this one, we could have just used the bottom of the already established range right here, or stick to your hard stop. It's really just a personal preference. So this one, sideways march and then finally pops higher. You do have the option to bolster or add to the position right here. Didn't get a whole lot out of it. What do we get? 57.06 up to 57.48. So, you know, 40 cents, nothing to sneeze at, especially in a market like today. 40 cents is like a windfall for a lot of trades. So even though the AI as a cluster didn't do so well, if we learn to identify these sideways types patterns on reduced risk, we can sometimes take advantage of them and even add to the position if a secondary pattern is emerging after the Holly signal. So that just leaves us the big 5% winner today in CFMS, a little $2.45 stock being kicked out by Mighty Mouse today. So once again, seen this song and dance before. Sideways action after the entry. You know, coming down here, testing that 10 period MA, towing the line for pretty much the remainder of the day on the 10 period, which is always a good thing. You know, forgot to kind of look at the ones. Let's just go back and look at Myrna and let's just see. Once again, Holly signal here, Myrna. A lot of these, when they're in play, they're going to hug that 10 period. It's also a nice, you know, auxiliary metric that you can throw into your Holly plays. But getting back to CFMS, sideways action. Stop way down here, never even comes close. This little doji down below the 10 period and then back up. So, you know, staying in this one, break even was never on the table, but just sticking to our hard stop or picking somewhere down here. Now on this one, if we would have used this little base right here, it would have gotten us this little doji candle. But all in all, after seeing the other ones play out, sticking for a little bit of this one, maybe the 50-50 method was the best way to approach this one. We stick to our original hard stop, we get out of half with Holly, and we get to enjoy the remainder of the push. Holly ended up losing a penny on this one, 14 cents. So with the -1, we got a 15-cent spread in there. Not the biggest spread, but when you consider the small dollar of the, or small price of the stock, still posting the biggest gain for the day on any of the AI trades with a 5.55% winner into the close. So we take what Holly giveth, and today she didn't giveth much. All right, maybe she had to do her tax returns today as well, but it is what it is.
Filed an extension.
Yeah, she did like I did. She filed an extension.
Yeah.
If you're a professional procrastinator like myself, then you file that extension. Hopefully I don't owe any money, so I don't have to worry about it, but in any case, we'll see what happens. I wouldn't be surprised if I got a tax bill. Nothing surprises when you're dealing with the good old IRS. All right, so that's just about it for Holly today. So when we do have a day like today, there is an upside because during this period we had plenty of good downside plays coming out of some of the old bread and butter high volume tickers that I like to showcase. And then once we put in the bottom here, there was an equal amount, in my opinion, of good upside and downside trades today. And since the market is not at highs and it's not necessarily at lows, two of my more favorite windows just weren't spitting out a whole lot today. The Turbo Family up, no resistance. A lot of these guys were, you know, you'd pull them up and they'd just be all stretched out and top ticky. Not a lot of consolidation going on in some of these. And the downside, just not a lot of stocks coming through that one, period, because these have to be at all-time lows. Now, there was one exception that was all over this ticker today. You might be able to guess the symbol. And if you can't guess, well, here it is. Good old lift. You know, here's the IPO price. Here's where the stock currently is. And even though we've only had a few days to map out here, what do we got total? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Look what Lyft just did back here about 4 days ago. All right. It broke down out of this little paltry range that it had established and is heading lower. Never could quite find a bid once it got down here. So as far as turbo brakes down, no support, Lyft was pretty much the only thing coming through here, along with a couple of more obscure stocks that aren't that liquid. So when we have days like today, I have to go back to my good old original windows, which are the turbo brakes up, the original forms, and turbo brakes down. Now, by the way, whether it's these two or the turbo up, no resistance or no support, if you'd like to grab these windows, all you have to do is come over here to channel 4 and click on it. You're going to see all of my favorite windows, Andy's, Sean's, and Steve's, and you can just pick the ones you want, right click and save them to your cloud, and then repost them on your layout there. All right, so, you know, needless to say, there are lots of stocks coming through here. So what does the pattern look like that we want to find? Because a lot of these are going to be past the point. It all boils down to the timing. All right. So the ones I'm going to be showing you guys today to the long side came from Turbo Up's, the regular version, and the downside was just the good old-fashioned turbo brakes down. So let's take a look at the first one. And we got to go back to 5 minutes here because a lot of these are a little hard to peg. Okay. So GH, first on the list. 5-minute bars that we're looking at right here. What do we have here? 5, 10, 15, 20, 25, 30 minutes after the open. And by the way, using 5-minute candles, I typically wait at least 30 minutes to even start perusing these tickers for these setups, because you have to give some type of pattern time to present itself. And 1 minute candles, I'm not really into that game. It's more of a younger man's game. 5 minutes is kind of like my minimum bar interval here, so that we just don't see something making crazy moves on a 1 minute time frame. So here we have a clear pattern developing on these 5-minute candles, and then the volume didn't come in right here, which is why we're not seeing the arrow here. But the price on this one, I believe, was 75. Yeah, this one was a little past that doji right there when we got into this candle right here. So if you're quick on your feet, you know, probably anywhere a third to halfway down this bar would have been my comfort level. But we got a nice move, right, nonetheless. And then the interesting thing about this one is that it repeated all of these other times here, right? And then you had a little consolidation here, another break to the low, another down move, and then it even finished it off here, okay? So this one set up 3 different times from the initial one. We had this one down and sideways, then we had this one down and sideways, and then we had the final one pushed down here. You usually don't see them set up like this, but I mean, this was just a perfect little 3-step down. Clearly a seller in this one today. And if we, oops, let me declutter this area for a second here. And relative volume was strong on this one the entire day, finishing about 60% more volume than normal. So definitely a seller in GH, first identified here. Just had the benefit of triggering here, a little sideways action, and then here as well. So, you know, whether you stuck with your initial position or chose these levels to leverage up, they all worked out pretty well today. Now, 1.6 is nothing to write home about, but it all is dependent upon the day that you're in. And when you see days where the indices were all well below relative volume of 1, well, 1.63 on a day like today means a lot more than other days where the volume is higher. All right, next up, BGNE. Looks a little bit different, a little bit more stretched out, but keep in mind 131.04, we're only looking at about a 60-cent range in here. Now, here's the entry signal right here as this low is penetrated and this range, this opening range break, or what we refer to as an orb, is cracked. And then up here, I've got my risk areas defined. Here's the 5-minute candle where the entry is made. What do? We count back 3 candles since we want to look at the highest point in the past 15 minutes, not including the entry bar, 5, 10, 15. There's our risk. Here's our reward area. Probably just a little bit over, slightly over 2, or maybe right at a 2 on the button, which is typically the minimum that we want to see here. If we try to fit this area right here into this area, we could fit it in there 2 times, probably have a little bit left over. So once again, the beautiful thing about these patterns is their simplicity, because they're here every day, whether it's a upswing market, downswing market, or more importantly, in kind of a boring market like we had today. So BG&E, another good crisp range break that paid off nicely. Another nice tight one from GDS today. Broke it right here, but the volume wasn't there. And that's the kicker about turbo breaks up and down. You have to have the accelerated 1-minute volume. So the signal didn't come until right here, a few pennies past that previous bar. But when it's up here, you know, we just have to put our trader cap on and go, man, we're getting it pretty dang close. So close that it's kind of insignificant here. So getting the break right here, and then we can see boom, 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 just off to the races. But the beautiful thing about this one is the risk. You know, we got a very small risk area up here. Even if we fold in the first 1/8 of that bar, which is where the alert actually occurred, you know, how many times could we pack this risk into this area right here? It's a lot more than 2, okay? This one was more like a 4 or 5 risk to reward, or excuse me, reward to risk ratio here. So a real clean break on the GDS. Very simple pattern, low risk, and this one paid off handsomely. And then we got a more recognized name today, Square. Now, a little bit wider of a range than what we've seen in the past examples here. Now, really all that's important when we're talking about these types of plays is the prior 15-minute. You know, obviously if we were having to use risk as high of day, it wouldn't be near as attractive, and you can't see it too clearly here, but there's a wick on the opening 5-minute bar here. So, you know, this thing didn't crack lows until right here. So, excuse me, right here, 5, 10, 15, you can stomach that risk. If it had been 1 bar earlier, we'd have to go all the way up here. That might be a little too much, but it's all about how much it moved in the prior 15 minutes. This area could have been way the heck up here, but as long as we're comfortable with accepting the prior 15-minute high as the risk, then our risk is right up here, reward area is here, and probably right about a 2xer on Square. And these are some of the more pristine patterns today, and it took a whole lot of sifting through a whole lot of symbols to find these, especially when you're doing it in a real-time environment. But hey, welcome to trading. Nothing about it is easy, typically. This one presenting one more little opportunity if you really are aggressive at another entry here, but it sure didn't last long. Start doing some wiggles, getting back above the 10-period SMA, which when you're short and you get a bar close above that 10-period, even though this is the 5-minute, it's not a very good sign. But in any case, this one did head lower. If we pop it over to the 15, we can see it was tapping it down the whole way here. All right, so that's the downside. Now let's take a look at some of the ones that were on the upside. This one, these are 15-minute candles. We could stick with this. I could go back to 5-minute candles and it would look pretty much the same, just with a few more candles here. But the thing to point out here is, number one, the gap, and number two, the volume was pretty much raging in the sky all day. We finished at 4.61. So, boom, nice clean range break right here, and then just off to the races, right? Getting almost, pretty much hit that gap and then backed off a little bit at the close, but a nice mover. Never even acted like it was going to throw us a wiggle. Risk is here, reward all the way up here, which I forgot to mark. but a very nice pain-free trade in the water. And that one was from Turbo Breaks Up. We got another one here, SWX, kind of a little bit more whiskery on the 15-minute candles to the up and the downside. So I guess it kind of equals out here. Not near as pretty as what we just saw, but it worked nonetheless. We get the range break right here, popping through there. Prior 15-minute low, whether you use the wick or the candle, personal preference. Never even got down to the bottom or the body of the candle there. All the while way above that 10 period moving average for a nice little excursion up to the top here. And whether we use the wick, we'd be looking at roughly a 2x there. If you're a candle person, less risk, more reward, and it would have held up for you even using the candle body on that one. But if you didn't take the cookies on this one, boom, back down to flat. Due to the nature of the day, not a big surprise there. So water, SWX, PEP. Ooh, see, I love these because they're so tight and clean that, it's hard to resist. Really nice break right here, a little sideways action, just a slow grind up. Even a couple more opportunities here. Once we get past this guy, we could set up a new tier level right here. If we wanted to make a second entry that was on the table here, and then even a third one as we consolidated and broke to a higher high here, and then even a little bit more here. So a buyer in PepsiCo all day, clearly with just nice upside momentum. All the while, the 10-period SMA acting as Atlas, keeping that thing up in an upward motion. Once again, relative volume of 1.3, nothing to write home about, but considering the fact that the SPY and all the major indices were well below average, those lower relative volume readings take on a little bit more weight when overall market volume is low. Now here's an extreme example, all right? ZAO. Now we see what was happening in the first 1, 2, 3, 4, 5, 6, about the first hour and a half, and then whammy, right? Now, in all fairness, what was the price when that came out? And it was $30.96. So here's the $31 level, $30.96, right about here, okay? So here's where the alert came out. Now, it moved pretty fast. If you're quick on the keyboard or you're running a strategy through B+, you probably got a pretty decent fill, but this one is very questionable as to whether or not you could have gotten in there in time without chasing it too much. But nonetheless, range break all the same. This one just took off like a rocket right off the bat and then flattened out for the rest of the day. And there's probably another dozen in there that I haven't marked up. But as far as quality plays go from turbo breaks up and down today, there were a lot more than I thought there would be based on that first 15 minutes of market activity. But once again, these are really great patterns, whether you're an advanced trader or you're brand new and really don't know what you're looking for. The simplicity of the range break, the orb, the opening range break is something that should be in everybody's arsenal. Now, I've got a little side topic here. And this is something that we talk about a lot, whether it's in the advanced TI University course, and they probably cover it a lot in Monday's 101 and probably even 201 Tuesday. I've even heard Steve talking about it as well. And of course, being in support, we get these questions all the time. This stock should have showed up in my alert window today because it looks like all the others, and I need to know why it didn't show up. The example we're going to use today is MTCH, okay? And I think when I pull this one up, you're going to see exactly what I'm talking about. So once again, today's action, 15-minute candles, nice and tight, and then whammy, we get a nice break right here in this candle, and then whoosh, talk about a nice risk to reward textbook. It's hard to beat these. So you can understand my dilemma because I actually went through this process today. I'm looking at Andy's Extreme Volume High-Low Pro later in the day to see if there's any overlap between my tickers and his, because sometimes there is, sometimes there isn't. The main difference between Andy's configuration here, other than the fact that it's in a multi-strat window, we got both the high and the low combined in the same window. He's got a lot higher volume requirements on his as far as the 1 minute and the 15-minute go. 10 times normal on the 1 minute, where I'm just requesting 3 times normal. So he's got a 10x factor in there. So needless to say, these are really kicking. And I see Mitch and I'm thinking to myself, how did I miss Mitch today? Why didn't my ticker spit it out? And it's the textbook example. Because in this version, I'm saying a market cap of $4 billion. Now, I just kind of picked that at random. You know, I didn't want to go 5.6 billion, which is the minimum market cap for the S&P components, but just wanted to make sure that they're capitalized fairly significantly. Why did I pick 4 million and not 3 billion? Don't necessarily know. Just trying to limit the number of symbols that come through, right? But Mitch didn't come through, and sure enough, I practiced what I preached. I went back and looked at every filter. Why it didn't come through? Bingo, right here, market cap, not 4 billion, 3.92 billion, right? So therein lies the problem. Tomorrow, am I going to lower my market cap to 3 billion? Maybe so, because man, I really hate missing such a pristine setup as I missed in Mitch today. Hey, look at the 10 period, you know, above it all day. What was Mitch's relative volume today? 3.56. So the point being, even on a day like today where we have a small gap down, we go to the bottom, we cycle all the way back up on paltry volume, there are high quality plays out there each and every day. We just have to know what to look for, know what pattern we're looking for. And in the case of all the setups that I just showed you guys, it's one of the more simple patterns, right? My good buddy from the past, one of my favorite ancient guys, Leonardo da Vinci, simplicity is the ultimate sophistication, right? And, you know, used to tout that all the time. Haven't really been using that line lately, but on a day like today, I feel the need. All right, so opening range breaks, nice and simple, easy to find. It all just boils down to timing. And are you disciplined enough to wait and wait and wait until you find one that's just right and the break has just occurred? They're out there every day, right? And you may have to find, or you might have to sift through 10, 15, 20 different symbols before you stumble onto the right one. But when you find it, it's worth it for obvious reasons. All right, let me just take a look here. We might finish up just a little bit early today just due to lack of activity here. But I tell you what, Steve, we've got a little bit of time left, so I'm pretty much out of stuff today. So if we want to open the floor up for a little bit of Q&A, I'm all for that. Let me get my questions panel back up here. And yes, Jeff, this webinar is being recorded. We record all the 5 p.m. Easterns and post them up to our YouTube channel as soon as Scott's done rendering those guys. So I think it'll be tonight when this one's up. No problem.
If not tomorrow, definitely.
Yeah, for sure. All right, so a few minutes for some Q&A, or if anybody wants to take a look at any charts, go ahead and throw them out there as well.
A point of reference, we do not record the Friday 3-hour live sessions that Jamie mentioned earlier, so those just can go in any different direction, and it's too long to record. So if you can, try and make it to those Friday live sessions, and we can help in real time with other stuff.
Absolutely. Yeah, Randy, you know, the running up and running down, Randy's saying how he really enjoys the running up and running down alerts. You know, those are alerts that people either really, really love them or really, really can't stand them. It all just depends on if you like the fast action on the 1 minute time frame, because that's what those guys are looking at. I tend to like them. But then again, those quick moving rips on the 1 minute time frame are not for everybody. Has to be the right situation. Oh, okay, Mark, I'll pull this one up for you. BPTH. And just to give everybody a little frame of reference on BPTH, this was BPTH back before March kicked in, and then we had BPTH go from $1.56 up to about $70, and then we can see what's happened since then. As far as what in the world to do with this chart, obviously if you went home long on Friday, you're a happy camper today. But I don't know. See how it kind of just wicked back down above this little area right here? There could be resistance, Steve. I mean, there's not really a whole lot of levels to mark up on this chart.
No, and also I have a hard time sometimes when those stocks do that to come back to life and get the magic going again. It's kind of unusual for that to happen. So I have just my experience and bias alone kind of tells me be careful with that. I don't know what the reason is, but if it builds on that, obviously don't want to take out today's lows and you want to work higher. And then quickly, Mark, he asked about that. There's really no input output for the AI. It doesn't give us a recommendation on a single symbol. The AI is looking and scanning the market in real time, and then if there's any strategies that are working really well based on back testing, that stock within that strategy will be deployed in real time. We never really know what stock symbol it's going to be. So just to clarify that.
Yeah, the AI is looking for statistical viability across the entire market, right? And it uses, a lot of data to arrive at the strategies that are presented for each and every trading session. So just wanting it to look at one single stock, I can understand how that would be cool, but that's just simply not the way that the AI generates its numerical data sets. And let's see, Jeff, you were talking about a clearinghouse of alert profiles. Well, that makes me think of a collection of alerts, right? Which, other than the channels, this is the best place to see archived alerts, if I'm understanding the question correctly. But as I was referring to channel 4 earlier, let me just click on channel 4. Maybe you've already been here. But if not, this is a great place to go to get different alert window and top list ideas from myself, Sean, Andy, and Steve. These are all of our favorite alerts and top lists crammed into this one layout. So might be a good place to check it out. Okay, yeah, channel 4. In addition to all of the other different channels that we have, according to the various topics here. All right, looks like that was a little flurry of questions, but it's kind of dried up. So last call for any questions about anything. If no questions come through, then we'll just let Scott walk us out, and he can tell everybody how to save a little bit of Do-Re-Mi on either a new subscription or an upgrade.
Right on, thank you. Yeah, just a couple items on the way out and that code that's good this month. There's an ebook. It's very helpful. It's got 5 strategies on how to win in a post-BTFD market. Jamie and Steve both contributed chapters. So do check that out. Just go to trade-ideas.com/ebook and put in your email address to find it. There is also a podcast. We had a new episode out last week. Just search for Trade Ideas Podcast, whatever app you use to listen to podcasts in, and you will find you'll get us. Oh, just subscribe to it so you get the next episode out and all that kind of good stuff. And you can cruise through the old episodes. There's some good stuff in there too with some guests. We've got a code that's good all month. Auto Holly is all caps, just like you see it on your screen. And a reminder that there's another code that's good through the end of day today, and that's tax relief. So you probably already have an email about that one, and there's a pop-up on the site, so you can make use of that. The tax code saves 20%. The code Auto Holly that's good this month is 15%. You can use that anytime this month. Thanks, everyone, for attending. We'll have a replay of this webinar up later on tonight or tomorrow, and you can email info@trade-ideas.com with any of your questions. That goes right into our help desk software. Follow Jamie on Twitter at QuantBot, Steve at TodayTrader, and Trade Ideas Pro is the Facebook handle to follow, and share the stuff you post with your friends. Thanks, everyone. Thanks, Jamie and Steve. Later on.
Thank you very much.
See you tomorrow.
Bye-bye.